welcome everyone to another episode of the Insilico Terminal podcast. Today I have with me Scott Phillips, and I like to ask my guests to introduce themselves at the beginning. Who are you? What do you do? How do you describe yourself?
All right. I'm Scott, and I am a professional trader and mostly an algorithmic trader. But I've done a lot of different sorts of trading, and my expertise is in trend following trading, and mostly in TradFi trend following. And I'd done that for a long time. And in 2019 or so, I realized that I wasn't adding anything to that process. Like the returns I could get in TradFi, I've averaged like 15% a year, but I could give that money to a manager and get nearly that. So I did, and I pivoted to crypto in 2019, and I built trading systems for crypto, which fortuitously went live right into DeFi summer, and then I had a life-changing win from that, and then I started a business out of that, and one thing led to another, and I'm kind of too online and terminally online. So I've kind of been early to memes, early to a bunch of internet bullshit, full stacked hype early, and now I'm my partner, the robot James, who some of you will know, is a prominent guy on Twitter, or he used to be, and he and I are building out DeFi hedge fund infrastructure on the Hyper EVM, and we're launching our own, basically prop firm trading DeFi vaults. With another guy called Liquidity Goblin, who's our great friend and execution partner, and we're going to gamble some of our own money and probably gamble some other people's money too.
How long, since you said you've been in TradFi before, how long have you been in trading in total? Or what made you get into trading in the first place?
Oh, this is a hilarious story. So I went broke in middle age, and I found myself in 2007. I found myself walking out of a prison gate with all my possessions in a shoebox, and in a brilliant stroke of complete fucking idiocy, I decided that I would become a professional trader and make it all back, which is like the dumbest idea you could possibly have. And so I failed predictably and repeatedly at that. I'd top up an account mostly by doing bad things, and then I'd lose that money gambling, and then I'd come back, and one thing led to another. And after like the sixth time of blowing up a small account, I realized I needed to get a bit serious about it. And so I started to research systematic trading. And luckily, the first thing that I tried was this shit called trend following, which is a very weak edge. Like trend following is my expertise, and trend following is the weakest edge that is still an edge. So in TradFi, it works through diversification. Like you trade 30 or 40 different futures markets, and that's what I did. I traded 35 different futures markets, and I would buy the ones that were going up and short the ones that were going long with simple technical indicators like moving average crossovers and breakouts and things like that. And anyway, I'd done okay at that, and there's a whole big industry of people doing these really retarded systems in TradFi. And they call them one entry, one stop systems, and they're derivatives of a bunch of early traders called the Turtles, who you're probably too young to have heard of. But the Turtles were these sort of legendary trading figures, like in the 70s and 80s, and they're retards. Like the trading systems from the 70s and 80s are retarded. They're exactly what like the 70s and 1980s cars, right? Like they're not as good as the ones today. And so anyway, you put these things to crypto, and they work. They used to work. Well, they still work pretty good, actually. They're still better than Sharp 1.3 in crypto, right? Which isn't too bad. And so the way that they'll work typically is, for example, buy everything that makes a closing high above that makes a close above the 20-day high, and then sell it on a trailing stop. That's basically how one entry, one stop systems work. And then I developed progressively more and more complicated systems, and I got on Twitter, and there was people actually running proper hedge funds doing that same thing but making much better money. Very good Sharp ratios. And so I started to become friends with them, and they told me eventually how they did their stuff, and we ripped off their ideas from the group chat, like almost all of my trading ideas are ripped off from a group chat, like probably like
Yeah.
my viewers. If there's one tip that I can give, newer traders is get yourself in the best group chat you can and make yourself
Hmm.
useful and don't be a prick and be funny and be smart and be likable. And eventually people are going to tell you how to make money. And, in crypto
Good alpha.
yeah, with crypto, we see a couple of effects, right? Like it's such a ball ache to put your money in and pull it out of crypto, right?
Hmm.
Like, so the vast majority of people that I know in crypto don't even have a fucking off ramp. Like, you know
Yeah.
what I mean? Like, it would be unusual for people to have an off ramp in crypto. So that causes an effect where if you're up in the casino, no one pulls the chips off the table; they just continue to gamble, right? And
Yeah.
there's
Yeah.
there's no actual there's no actual valuation, so nothing's tethered to any sort of real. Like, I mean, Sandbox was like $10 billion. Fucking Shiba Inu $40 billion. Like how
Yeah.
the fuck do you come up with those numbers? Like those aren't. So what I mean is that with that, the absence of any sort of like you have to actually make money or cash flows or PE ratios,
Hmm.
shit can momentum, which is when things start to pump, there's a statistical effect that they're probably going to continue to pump, becomes
Hmm.
quite a dominant effect. And we see other things too, getting your money in and out of a chain. Like, I don't know about you, but bridging gives me this unreasonable anxiety, like every time I do it,
That's
right?
it. I mean,
Oh,
it's pretty annoying, I would say. I don't really like the process, but
I don't like the process. It always just feels like someone's going to take my money, or I'm going to get hacked here, or I'm going to
yeah.
hit the wrong thing, or not have gas, or have this really like,
Yeah, it's very annoying. I don't like the on-chain experience at all. I think the user
no.
experience is very bad.
So the friction between things causes this effect where when people start making money on one chain, that money tends to wash around in like a hot ball of bullshit money.
Yeah.
And so we saw that like that's all that the Solana meme coins were. It was like the same hot ball of money just washing around. We saw it in Hyperliquid. I mean, you
Mm.
see it, and so one of the things that I tell people to look for is you should look where people are making a lot of money that they haven't earned, because I mean that's what crypto is, right? Like if we're looking at like why did I get into crypto? It's because I wasn't good enough to make it in TradFi. I couldn't get a job in a fucking hedge fund. I don't deserve to make 8 figures, but I'd sure as hell like that. I really have enjoyed that, and so when
Yeah.
I see someone who's like stupid, or like when I see some dumb fuck who's just put a couple of $1,000 on a meme coin and then now they're worth 8 figures, I go,
Hmm.
well, I'm dumb and I've got an insane risk tolerance. Why can't I be
Yeah.
that guy? And I think
True.
that's
Yeah.
I think that's at the beating heart of crypto. Is like, why can't I be lucky? Why does it have to be those fucking early Bitcoin guys? Fuck them. What about me?
Yeah.
It's like, and so whenever you see that start to happen in crypto, that's like a magnet. That's like
Hmm.
that's an idea virus. You mean I can just trade these fucking funny name coins and if I pick the right one, I'll get rich? Like, fuck yeah, I can
Hmm.
do that. Like, like anything with skill, like there's a lot of edge in meme coins, right? Like if you delve in, if you quant things out properly, like there's a lot of highly predictable factors with meme coins.
Have you
But
ever done that?
oh yeah,
Gone
yeah, lots.
quantitatively into meme coins?
Oh yeah, yeah, lots. I mean, so volume is highly autocorrelated with meme coins. So
Hmm.
a rise in comparative volume is highly predictive of a rise in prices tomorrow. And we
Hmm.
see there's okay. Let me give you some. Let me drop some alpha.
I'm
So
listening. I'm listening. I'm writing
okay,
it down.
so shit coins on average are pretty shit, right?
Hmm.
Like it's right there in the name.
Yeah.
So on average, almost every shitcoin that has perpetual futures listed will decline by 90%. Why?
Hmm.
Because mostly the people involved will eventually either sell their spot bags or hedge out with perps, right?
Hmm.
the way that market making contracts for shitcoins work is the industry standard model is to do a 7 day. It's a call option based on a 7 day TWAP of price that goes for 90 days. So this is the
Mm-hmm.
industry standard market maker model. And if you plot the average new listing on any tier one exchange, whether it's the same for Binance, even though Binance are more egregious, it's the same for Hyperliquid too. It's in the market maker's best interest to keep to keep the price stable for a couple of days. And if pumps are
Mm-hmm.
going to happen, and they happen in the first couple of days, you can make an incredible trade by shorting every new listing after about 7 days
Mm-hmm.
and holding for 90 days, which coincidentally is the same time that the market maker contracts go for, because the market makers aren't
Interesting.
interested in taking a directional view on whether your shitcoin is a success.
Yeah.
They're interested in staying delta neutral. So they have to sell X amount and you can plug it into an options calculator and work it out.
Mm-hmm.
And those are thinly traded markets and highly, so that's a really good trade. But if you look at anywhere where perpetual futures are listed on small coins where they're not listed on major exchanges, those have incredible edges because um, if you think about it, there's a bunch of people with spot bags and everyone's wallets are public and they don't want them to know that they're dumping. If they have
Mm-hmm.
any exit liquidity available, they tend to go for it.
Mm-hmm.
So you can find third and fourth tier shitcoin casinos, like Zusu's one. There's like he is who he is, but there's incredible edge for anyone who's willing to roll the dice on him, stopping you withdrawing. And
Mm-hmm.
there's a number of places like that. What else can you do with small shit coins?
What happens after these 90-day market maker contracts, like when they run out?
Typically they bounce a little bit, but um, it's not so. Markets are not like an equation where you can solve for X and plug in. They're like super
Yeah.
noisy. So we're talking about broad tendencies to go down, and you're going to get fucked occasionally. And so if you're taking a trade, you're probably taking there's probably a very, unless you're talking about say some sort of market maker like Wintermute or Selene or something like that. Like
Mm-hmm.
they probably have 2 or 3 losing days a year. Like like you and I can't do stuff like that. Like we're just not that good.
Yeah.
So all the
I mean,
trades
speak
that
speak for yourself, but no, I'm
yeah,
joking.
I mean all the trades that are that all the opportunities that are very attractive are also attractive to really smart people, right?
Yeah.
And I think what's important with crypto is coming to it with an attitude of humility and saying, well, I've met some of those really smart guys and I'm not as smart as them. I'm just not.
Mm-hmm.
Like this, I'm just not. So anything that I can do that has a positive expectancy probably is also going to be shit. And it's also going to be useful. So I think this is a good framework for evaluating trades is your trade should be useful to someone in the market.
Mm-hmm.
So for example, if I was doing, if you're market making, you're providing liquidity to the market, that should be useful. If I'm doing trend following, so most people are buying high and selling, trying to buy low and sell high, right?
Mm-hmm.
I'm in trend following, I'm trying to buy high and sell even higher. So I'm doing the
Mm-hmm.
opposite of everyone else. So I'm taking on risk that smarter people than me don't want to take. And the same with basis trades like buy spot, sell futures. You're taking on a shitty risk. You know,
Mm-hmm.
like the trade that USD, the trade that Athena does is is not a risk free trade.
Yeah.
No matter how they package it or slice it and dice it. Like if they didn't have their ADL agreements in place with Binance, I mean, they would have gotten carted out on a stretcher a couple of
Mm-hmm.
weeks ago, right? So there's no way to take risk without it being risk free. And
Mm-hmm.
I think what you want to do as a smaller trader, especially a smaller trader who's trying to run an account up, is look for the shittiest places you can. If you're a casino player, you're not going to find edge at the Bellagio, but
Mm-hmm.
you might find a sloppy dealer at some Indian casino somewhere, or even better, you might find one of those, on the border of Cambodia scam towns. that might be a place where you could count some cards.
Yeah.
And it's very much like that in crypto. If you're a small guy, like you want to be looking at. So we traded on OX. It was OX Fund at that time, and it's now
Hmm.
Quanto.trade, Zusu's exchange. And everyone I told about trading there said, "I'm not fucking trusting Zusu. Like he's a
Yeah.
fucker." And like I'm not trading there. It's the fucking guy. He's like, and it's like that's exactly why you want to trade.
Yeah.
Our Sharpe ratio was over 10. Click trading.
Hmm.
A man with not any algo, just clicking with buttons and a mouse and a spreadsheet. And
Why is that? What exactly did you do on the exchange?
we were doing. He was manipulating funding rates, and we saw that
Yeah.
he was pinning the funding rate of his own coin. He had some bullshit deep buried in the product disclosure docs, and
Hmm.
he had it pinned to 760%. So we're just doing a basis trade on his
Mm.
OX.coin and hedging out the profits as they came. But the profits, but it was like 780, 760%, 780% linear was every 8 hours was the maximum. But if you compound that
Hmm.
out, it's like a huge, it's like a huge yearly return.
Yeah.
Um,
But
but
the
there was
profits were all also in Ox token, right?
so you had to always hedge the OX
Yeah.
token. So if you didn't hedge or you used anything else other than OX as collateral, like if you deposited Bitcoin or USDT or whatever, you're
Hmm.
absolutely going to get fucked because like hidden deep in the product documents was like all the it was just like it was just like a real one of those really shitty carnival games where it's
Hmm.
built to rip the users off, but
Yeah.
like unless he did this one specific thing, which is you know figure out when he's manipulating the funding in his favor and trade alongside the direction with that and keep your profits
Hmm.
perfectly hedged in OX. Um, so it was operationally annoying. Like you had to,
Yeah.
but I mean, those are the kind of good trades that you'll find in shitty places. Like you're not finding that on Binance, right?
Hmm.
And well, I mean, there's good trades on Binance, but I
But
mean,
what do you do? What do you do about like the counterparty risk in those cases with like the Maxi FUD popping up again last week or so? I think I feel like
well,
every couple of months, like Maxi FUD is popping up, and then everyone is like they're insolvent, but then they just keep on operating the same way until
I think they probably are
it happens
insolvent.
again.
Um,
Yeah.
I think you wear it. I think you have to wear the counterparty risk and do it eyes wide open, and be
Hmm.
very careful. Like withdraw on any sort of suspicion and set up alarms. Like everyone wants crypto to be risk free. Like
Hmm.
that's just I want a fucking blowjob from Sydney Sweeney, but it's just not a to be able to make generational wealth from crypto and
Hmm.
do that safely and comfortably without taking any counterparty risk. Well, I don't know
Doesn't
what
really
I don't
work
know
like
what to
that.
tell
Yeah.
you. It doesn't. I mean, I'm a big believer in Hyperliquid. I'm a big believer in DeFi for DeFi. I think Hyperliquid is
Hmm.
a I think Hyperliquid is the future. By the way, I think,
Hmm.
and I think Light is probably a pretty good product too, like in its own way. Um,
Hmm.
but you know, Hyperliquid is at best 15-20% of a Binance, and Lighter is at best 20% of a Hyperliquid.
Hmm.
Like, like I mean, I trade on Binance, Bybit, DYDX, KuCoin, BitGet, and Hyperliquid, and
Yeah.
I absolutely maxed out DYDX. Like,
Hmm.
can't fit another dollar into its butthole. Like performance goes down when the more money you throw into
Hmm.
something, the performance goes down, and
Yeah.
there's just not an unlimited amount of money that you can throw into trades. Like Binance is still like sadly where it's at if you want to trade size.
With like your trend following strategy, that you just hit constraints where you impact the market so much that your profits are
Mhm. And
decreasing,
trend
basically.
following is not a particularly is compared to most strategies is a high capacity strategy because you're
Hmm.
spreading it out between 50 coins or 100 coins, right? So,
Yeah.
so if you've got $1 million on 100 coins, you like 10 grand a coin, and they're mostly higher volatility than you'd want to trade anyway. So you probably got 5 grand position sizes, and they wiggle up or down a couple of $100 a day. So it's
Hmm.
not a big deal. But at a certain point, and that point isn't really that large. Like for DYDX, we started hitting capacity at like 10 million bucks on trend follow. So it's
Hmm.
not really that large before you're going to run into. I mean, so what happens is you need to get better execution. So I'm talking about fairly naive once a day execution. So like
Hmm.
the daily candle goes up, and you're gonna buy a little bit more of the shit that's gone up and short a little bit more of the shit that's gone down. If
Hmm.
you do that naively, like it's quite predictable to go, oh well, I know there's a bunch of trend followers in the marketplace, and a bunch
Yeah.
of people trading off charts too. And charts are basically trend following in a trench coat. All the effects that you see in the charts are like derivative of the effect from trend following,
Hmm.
direct derivative of momentum effects. So there's a bunch of people who are much smarter than us who go, well, fuck. There's a bunch of dumbasses like me who are going to be buying the shit that's gone up, and it's just
Hmm.
gone up. So why don't we predictably front run those flows? And guys like Liquidity Goblin just eats for lunch all day. Beyond a certain
Hmm.
point, when you become big enough, to impact the market. And so there's a number of ways you can deal with that. You can spread your trading out. You can make reasonable short term predictions of uh, whether or not things are likely to go down in the next couple of hours, and save you buying until the good times. But really, the sensible way to do it is to just graft a market maker on the top of your trading systems, right? And so you
Hmm.
act as a market. So the sensible version of algo trading is basically an unholy mashup of a market maker and uh, and some sort of continuous prediction mechanism.
What do you mean by that? How exactly does that
Okay,
work?
so let's say you're talking about like a caveman system. I'm going to buy everything that makes a new 20-day high. That is
Hmm.
either all on or all off. It's very binary, right? And
Yeah.
it's unlikely that your view about Bitcoin is like, I'm completely neutral. Now I fucking love it. Now I hate it. Like
Hmm.
that's not in reality. So a better version of a trading system would be one that closely models the effect that you think is going to be there. So if I
Hmm.
think that if a coin's gone up a little bit, it probably is going to go up a little bit more tomorrow. Or if I think
Hmm.
if it's gone up a lot, I probably think it's going to go up a lot tomorrow. That's the effect. If I think that effect is real, and I know it is, and the reason I know it is because it's true in stocks, it's true in bonds, it's true in gold, it's true in every country in the world, and it's true in crypto, but on average about 2.5 times stronger than in any TradFi markets. So
Hmm.
if I think that effect is real, I probably want to model that as a continuous signal. And so what I mean is a signal that wiggles up or down in a wavy line. And
Hmm.
the advantage of doing it that way is, let's say I have a different signal, which is like a basis trade. So if I think that high funding cost of carry is predictive of a thing going down tomorrow, which it absolutely is. Like we
Hmm.
know that basis trades are a thing. We know that stat arb carry factor is a thing. We know that negative funding rate is highly predictive of price rises, and high funding rates is highly predictive of price declines. Right? Like,
Hmm.
so I can model that also as a continuous sort of wavy line signal, and I can blend my trend signal and my carry signal together to get a better signal. And this technique was first done by a big hedge fund in TradFi called Man AHL, which has a very good 30-year track record with a sharp above one. It's a solid idea. And
Hmm.
if you think about every other trade that in crypto, like all the things that we've talked about, but there's a limited amount of things that actually make money. Like they're all
Hmm.
basically they're all the they're it's not a it's not a huge list is what I'm trying to say. Like
Hmm.
however you want to make the sausage, like the basic things that make money are pretty well known and pretty well understood. There's liquidity provision, there's momentum effects, there's carry effects, there's short squeezes. There's
Mm-hmm.
volume is, for example, volume is very predictive of price rises in crypto. Open interest, high open interest is predictive of price rises, and drops in open interest are predictive of price falls. Um,
Mm-hmm.
Premium, which is the difference between spot and futures, and the rate of change of premium are predictive of prices as well, right? Like because premium is kind of how funding rate is calculated because it's the difference. So it's
Mm-hmm.
like a forward-looking kind of funding rate. So you can model all of those different things into like squiggly lines and say, okay, get one squiggly line to rule them all, and that's
Mm-hmm.
how much of this coin we should have, and just hold a big portfolio of like as many coins as you can that have enough
Mm-hmm.
liquidity that you're not going to get stuck in them. Um, and you would do that fairly simply, like by just having a threshold, saying, well, I'm going to get fucked on this coin and short squeezed if I hold more than 10% of open interest and I'm more than
Yeah.
5% daily volume. And so you just say, well, I can't fucking trade anything that's bigger than that. And so
Mm-hmm.
so what what we call mid frequency quant trading, which is what I do, which is so high frequency quant trading and market making. They're all making predictions like a couple of minutes, 15 seconds to a couple of minutes out, right?
Mm-hmm.
And they're all way smarter than me, so I can't do that. And you've got, at the other end, you've got like the Three Arrows Capital, and the guys, the venture capital guys, making a big
Mm-hmm.
portfolio of coins and just punting it, right?
Yeah.
And so in between, there's this sort of uncolonized stand where there's a lot of opportunity. Like
Mm-hmm.
the market maker guys, and the reason is because the trades that I do aren't anywhere near as good as the ones that the market maker guys do. Right? Like
Mm-hmm.
like we'll make money every month, or every 3 months, but we'll have losing months.
Mm-hmm.
Like the market maker guys, if you told them you're going to have losing months, they fucking shit the bed. Like they just don't.
Mm-hmm.
And that's something that we see universally is the smarter the nerds are. And you might have seen this, like the once you get to like the super smart nerds, they really don't like taking risk. They really want like they have to be really gently coaxed into taking. And like you're on the degen side, right? Like me, like fuck it, like let's
Mm-hmm.
full port it, like let's go, like round trip retardio, fuck it, let's do it again, run it back. So if the nerds who are much smarter than us could take a little bit of risk, if they didn't have tiny, tiny, tiny little nuts, then they'd be in a much stronger position. So
Mm-hmm.
the edge in this sort of we're making predictions on sort of 6 hours to 48 hours. That's like the
Mm-hmm.
sweet spot. And I can predict fairly well where prices are going to be 24 hours out. But the problem is, if I'm predicting prices 24 hours out, I'm buying and selling a lot, and that gets very expensive in crypto. And so if I'm if I'm shit at execution, then it's going to cost me too much. I'm going to give away all the money I make. So it's kind of
Mm-hmm.
this chicken egg problem that you can't do it unless you're a market maker, but the market makers don't really want to do it because it's not as good as what they have.
Mm-hmm.
And so, I mean, I solved that problem by partnering with market makers, and yeah, which
Mm-hmm.
was the only way that was feasible for me to do it because I'm not smart enough to run a market
So
maker.
you're doing everything algorithmically, right?
Everything.
No manual execution
No,
whatsoever.
so
And
you
then
can't
you could,
you can't
it's like
trust it.
his system, but the discretionary part is maybe the all the data that you're putting into it that you talked about, like all of this open
No,
interest rises or.
um, we don't use any discretion at all in the data,
Mhm.
because I'm just not trustworthy enough. Like,
Mhm.
and what we find when you're building trading systems is it's very difficult to avoid making trading systems that would have worked in the past, but every time that you do that, you fuck it up because it's
Yeah.
really easy to find back tests and things, shit that look good in the past. You're not trading the
Mhm.
past. trading the fucking future. And the one thing that we know about the future is radically the only thing we know about the future for sure is that it's not like the past.
Yeah.
So you categorically don't build trading systems with backtests. Like
Mm-hmm.
we built our accounts up substantially without and trading, multiple millions of dollars before we ever did a backtest on our systems. The way that you do it is to work out if I have this thing which I think predicts prices, am I making a valid prediction? And
Mm-hmm.
and you do that with scatter plots and centile plots and fairly standard econometric type techniques. But you want to get away from optimizing for things that worked in the past. And
Mm-hmm.
so if you're going to say, oh, I want to run it on this coin, but not that coin, I want to switch it off when this happens, because if I switched it off when that happened, it would have worked better in the past. Like
Mm-hmm.
you're halfway to fucktown already. Like you're almost certainly guaranteed to fuck yourself. So
Mm-hmm.
the way to success in algorithmic trading is to get a bunch of really simple and weak and shitty trades. You get a bunch of trades that look like it's okay, but nothing
Mm-hmm.
special, and you blend them together. That's what you do. You blend together a bunch of stuff until it's a fairly reasonably thick soup. And so
Mm-hmm.
what you're hoping to do is that so trend following works in a bull run, and it works in a big crash too.
Mm-hmm.
And basis trading works while things are steadily climbing and not when shit goes nuts. Um,
Mm-hmm.
and short squeezes work when open interest becomes when derivative becomes more liquid than the spot, and you blend a bunch of these trades together, and you get something that's acceptable at the end. And
Mm-hmm.
at the end of the day, markets are pretty like we can only make money is if someone's willing to trade at bad prices, and that's just not necessarily an easy thing. Like
Mm-hmm.
the things where you get people trading really bad prices, like for example, like meme coins in the Solana bull run, right? Um, they don't last long,
Mm-hmm.
right? Like anything that you've seen that's like an amazing trade, like the life cycle of those trades is very short. So you want to think of it like a food pyramid, right? You want to at the base of your pyramid is your fruits and veggies and carbs or whatever, and
Mm-hmm.
you want to have a base of what we call risk premium harvesting trades. And the things that you would look for in those sorts of trades, you would look for things that have worked across TradFi and crypto. You would
Mm-hmm.
look at things that have worked across bull and bear markets. You would look at things that have worked in multiple countries, and you would look at things that have been known about for at least 100 years.
Mm-hmm.
For example, everyone knows that selling options is an edge, right? Like selling options is an edge for an obvious reason that you're selling insurance on the stock market, but people would obviously like to buy insurance in case their stocks go down, and the person selling them that insurance would reasonably expect to make a profit.
Mm-hmm.
Like that's the canonical example of a reasonable trade. Um, you want a number of those reasonable trades, and a reasonable trade is a trade like Bitcoin. Like unless you believe that Bitcoin's going to zero or it's a big scam or whatever, you would reasonably think that Bitcoin is riskier than the stock market, right?
Mm-hmm.
And you would reasonably think that if it's a deep and liquid market, which it is now, that it would be priced reasonably close to what's fair, right? Like because
Mm-hmm.
all the BlackRock, they're not fuckwits. Like you don't have to do the spreadsheet yourself. You just have to trust that all the people at BlackRock aren't fuckwits. And you would have to
I mean, the,
say
the
that
market the market is doing the pricing for you,
the
basically.
market's doing the pricing for you, and you would have to say that Bitcoin is riskier than putting it in the S&P 500. So you would
Mm-hmm.
expect to be paid more. And over time, I think that's a very reasonable expectation. It's an expectation that's
Mm-hmm.
been true in the past. And it's also true in the past that those early days super big returns from Bitcoin will never be repeated again, simply because it's not as risky as it was, right? And so, Bitcoin is a perfectly reasonable risk premium trade. Basis trades are a perfectly reasonable risk premium trade. Momentum is a perfectly reasonable risk premium trade. You want to build your pyramid of trading ideas on this base of solid things that you can't fuck up. Like if I was to tell you that I fucked up and lost money trend following, you'd have to call me a fuckwit. Like honestly, it's so stupid. You can't fuck it up because when everything goes up, you just long a bunch of shit, and when everything goes down, like now, I'm balls short today. Like if you can fuck
I'm
that up,
curious. I'm curious how does the execution work for you when you work with the market makers? Because like there's
so
like a range between what market makers do and then just market ordering in once a day when the daily candle closes. I guess
so you can
is it like a
you
TWAP or
can
something
do
like that, or how can
you can
you?
do very naive. Okay, so the truthful answer is if your edge is complicated and attractive, you need to have good execution. So you need to be as good as the market makers. If your edge is stupid, like buying the shit that went up and shorting the shit that went down, you don't have to be good. So you want to
I see. Yeah.
start with. So the idea is that, especially for people who are starting to trade, you might wish you were really smart. You might wish you had all this great infrastructure. You might wish you had all these. You might wish you had all that shit, but if wishes were fishes, here you are, you're a dumb fuck, and you're on Twitter, and you've got a fucking spreadsheet and a mouse. That's your resources. You're at the start of the game. So what do you want to choose? You want to choose the ideas that are so robust and so bulletproof that even if you're a retard, market buy, even if you're a market buy retard, that you can still make money. And so, for example, a very, very like retard version of trend following execution would be, well, most people are executing at 0000 GMT when the daily cut chart candle closes. You probably don't want to do that because you probably don't want to do what the fuckwits are doing. So
Yeah.
just wait a couple of hours, wait like 4 hours, 5 hours, 6 hours. And you probably don't want to market buy 100 grand of anything, right? You probably just want to buy a little bit at a time. Well, that's perfectly reasonable. You might not want to pay the spread. So you probably, if you're doing it algorithmically, you'd probably just want to put in a limit order and hope you get filled. And trend following has a natural attraction for these. If you're a dumb trader, you're trading 100 coins, you're trading trend following, and let's assume a million bucks notional, which isn't going to be true, and you're trading 100 grand, and you're going to be you're trading $1 million. It's going to be 10 grand a coin for 100 coins, and every day you're going to be buying a little bit more of 50 coins and selling a little bit of 50 coins. You're going to be upping and downing it like $200, and on each coin, and $200 isn't going to see you get fucked too badly by the market makers. You're going to be tipping your friendly neighborhood market maker. You're just not going to be bending over for it. So this is what I mean by you want to choose edges that are so big and indisputably obvious
I see. Yeah.
that you can fuck up the execution.
Or if you're a retard and doing the manual trading, you can use the terminal and have a bit
Insilico terminal is great for
better
that.
advanced
Yeah,
advanced
you'd be much
execution.
better after doing that. And
Save a couple basis points.
yeah, I mean, there's a
How did October 10th impact your system? Did it impact it at all, or are you like
can I share screen?
protected against?
Can I?
Uh,
Are we doing video here or just?
I don't know actually. We're doing video, but I don't know if you can share your screen. To be honest, you just
Yeah,
have to describe it like visually,
yeah,
audio visually.
we're up about 7% over the last over that sort of week. So because you're short the things that are already going down, most things started to go down before 10:10, right?
Mm-hmm.
So, and this happens a lot. In fact, this happened before the lunar crash. This happened, we've been doing this a long time. So we've been through
Mm-hmm.
all of the seminal fuck you events, the Three Arrows Capital, the Lunar, the fucking the uh, FTX. That was a horrible
FTX,
day.
yeah.
Yeah, that was a horrible day. Um, but the systems made money then because the market was already going down before it crashed, right?
Mm-hmm.
And why? Because smart people are selling out ahead. Like the smart
Mm-hmm.
rats are already off the ship, right? Generally. And right now, if we go down today, our system's 90% short. Like
Mm-hmm.
it's just the way it is. And we'll get back a lot when that trend reverses. But because I'm a complete idiot, I also have substantial spot bags because I'm a conviction holder of gold. So I'm like, yeah, I'm making money, but I'm also getting fucked. So I've got like that unique
Mm-hmm.
combination, and I've got that unique combination of emotionally the things that are making me money today. I can't point to and say, "Oh, that's me. I'm so good because of that." But the one
Mm-hmm.
thing that I can point to that's definitely me is my full stack conviction on hype is definitely, absolutely costing me money today. So it's like it's like this weird kind of situation that like
Yeah.
and trend following is a hateful thing to do. Like it, what it feels like is because you lose money like your win rate on trade. Oh, I didn't tell you this. Your win rate on trades is around 20%, right?
Mm-hmm.
So you're
Oh, it's
losing
that
money.
low. I see. Yeah.
Oh yeah.
Because most of the time the market is just chopping, and you're
Yeah,
basically going
most
nowhere.
of the time you're in a getting fucked business. So what it's
Yeah.
like is being like a battered wife. Like every day, hubby comes home and punches you in the face. Has 3 drinks, punches you again, and then like fucking 3 times a year he comes home with flowers and chocolates, and then it's time to suck a bit of cock, right?
Mhm.
Like that's the way it is with trend, and then it lasts
How
like
do you how do you deal with that mentally, or is that just something that came to you with all the years of experience and working with
I,
that, or?
I just had the weight of the world sucked it out of me. Like I've just you're running at 20% win rates for like I've been doing this since like 2012, right? Like
Hmm.
so, it's all I know. Like really, like it's
Yeah.
like I'm just used to losing all the time, and you expect to lose. It's very
Hmm.
comforting, like it's that like first time on the gallows meme. Like, oh, you guys are surprised when you lose money in crypto. Like,
Yeah.
you're in the
Yeah.
wrong fucking business, you dickheads. Like,
Yeah.
I lose in 80% of trades. Like,
Hmm.
and it's better than that when you can do better edges than trend following when you have better execution. But
Hmm.
the idea is that trend is so forgiving that you can run it from a spreadsheet. Um, there's a guy called Rob Carver who has a bunch of books that are very good. They were like my second or third iteration of production systems. My third iteration of
Hmm.
production systems was straight out of this guy's book. This guy called Rob Carvey wrote a book called Systematic Trading.
Hmm.
That system with some very minor modifications for crypto, that's like that's a good system.
Hmm.
That's better than almost any of the quant funds in TradFi have. Like that's good. Um,
Hmm.
you know, like you can make money in crypto just because it's riskier, right?
Yeah. Are you still running any other, like, trend following is your main thing, and then are you
Well,
still going on to other venues and like doing meme coins and all of that stuff, or?
I had to give all that up because while we're launching this DeFi vault, um,
Yeah.
and I find the focus from being an entrepreneur running a reasonable sized company, like we got like 50 people working for us, and
Oh, wow.
yeah, it's like a reasonable sized company, right? And
Hmm.
Robot James and I run it, and the focus from trading gives you this sort of like insane, hyper vigilant. Um, you have to be on Twitter to do it in crypto, like
Hmm.
completely unproductive for any sort of management work. So I can either do one or I can do the other, and
Yeah.
I bought a house last year, and it was being built, and I wanted to like not pull out of savings or out of my trading account, so I just gambled the money. Like I just wake up every day and I gambled really heavily in meme coins and a bunch of other shit, and I just hustled up that money out of. It's a wonderful feeling to be able to discretionarily trade and trade a couple of $1 million out of thin air when the
Yeah.
conditions are right. But you can't do that you can only do that when the sun's shining and everyone's in fucking happy places in crypto, and it never lasts long, and you've got to be very careful to count your money away from the table, and fucking you got to be careful. And it sends me anyway insane when I sit down and I go, okay, I'm going to wake up today and I'm going to gamble, and after 2 or 3 months, I'm the 24/7 pace of it, the 7 days a week in crypto. I'm ready for the mental asylum in 3 months, right? Like, I can only do
Many
it.
such cases.
Oh, dude, like, I mean, literally ready for the mental
Yeah.
asylum. I mean, there was a stage last year where I would have booked myself into a mental hospital if I could. It was like, oh my God, I just can't trade anymore. I'm like,
Yeah. How did you get out of that? Just by taking a break or
yeah,
focusing on different things?
I tried cutting my work down and not trading and just doing little bits, and that wasn't cutting it. So I had to have a full month where I woke up. I wasn't on email, wasn't on internet, wasn't on Twitter. I just spend a month like resting, like rest was the job, and my brain. And I couldn't think. My brain wouldn't like. It's really scary when you use your brain to make money, and then your brain turns to mashed potato, and then you're fucked.
Yeah.
Like, and the feeling is like you can't. It's burnout is really difficult. Like, and you can't think your way clear of mental illness, right? You just have to like put all the tools down and come back to it when you're ready to. And fortunately, I have good business partners and who could keep the business running and let me take a month off and yeah.
It's very scary.
It's very scary. Yeah.
I've just been to Tokyo and I got food poisoning for a couple of days, and obviously like I felt really bad physically and whatever, but I also got a lot of brain fog. I just stayed in the bed and was on my phone all day and couldn't really do anything, and it just like noticeable decay of your mental performance is
Well,
a very scary thing.
very scary.
Because what can you do then? Like,
and you're not out. You're not plowing a field or something. You're making money with your brain, right?
yeah,
Like, and then you notice, like, and if I'm noticing that my cognitive power is diminished, like I notice in other people way before they start to notice when they're
it's probably
cognitive.
worse than you think. Yeah,
It's way worse. If I'm noticing it, I'm already fucked, right? So for me, one of the things that I notice is that when I feel I'm at 80% of my cognitive load, I'm already at 110. So I have to. It's like down tools. Then at that moment,
yeah.
I have like hard rules where I just switch off the internet, unplug the laptop. I get away. I just run away.
Yeah. Good choice, probably.
I think that's
Can,
I think that's one of the really difficult things. Like, it's as someone who's traded a long time, both discretionarily and systematically, most people shouldn't trade. Like trading was a terrible choice in my life. Like, if I wasn't extremely lucky, like if you ran this simulation 100 times, I'd go broke in 90 of them, right? Like, I mean, if you think of
what else? What else would you have done? What was your other choice apart
oh,
from trading?
um, I was, you don't know the story.
I don't think so. No, you
Oh,
said that you've been in prison and came out, and then you
I
decided to
spent
become a
I,
trader.
I spent my 20s. I was pretty much what you'd call a career criminal. So I did every
Hmm.
sort of crime you could possibly imagine, like every sort of crime you could possibly imagine. And ran a big crew, and I wasn't like a fuckwit at it. I was like the 7 Habits of Highly Successful Criminals. I was really good at
Yeah.
it, amassed serious wealth doing it, and I just kept going to jail. Like, I just kept
Hmm.
going to jail all the time. It was just like a normal thing. Like, getting arrested and going to jail was like just a normal part of life. It was just like one of those things. And then I went into my last jail sentence in 2006, and it was like very obvious that the next one was going to be for like 15 or 20 years. Like we have
I
a very
see.
lenient criminal system in Australia.
Yeah.
You keep getting away with shit, and I was taking the piss.
Yeah.
And then I went straight. I just realized, well, the universe is trying to tell me you probably should straighten up and fly right. And
Hmm.
trading is not anyone. What I mean to say is anyone who's liable to make it trading is probably going to be successful no matter what they do.
Yeah.
Like I'm the sort of guy you could throw me out of a moving taxi in my underwear in any city anywhere in the world, and in 6 months I'd have my life together. And like I'm literally that guy. I'm
Yeah.
there's I've been broke a couple of times. I've been rich a couple of times. Like it's all okay, but I'm just a guy who's going to bounce. Like the people who know me know I'm just a guy. I'm just a guy who's going to take that in his stride.
Hmm.
Most people aren't like that. Most people would be much better. Like if you're going to be a trader, you should be a trader in a job working for someone else.
Mm.
Like that's really what you should be doing.
Hmm.
Like
Yeah, I just read the worst contrarian article just about that. I think
oh,
like he was
he's one of my
talking.
really good friends.
Yeah,
He's
he was talking about the exact same thing. Like if you make it in trading, you can be successful in lots of other things that are like way less risky and easier to be successful in. If you're the kind of person that is going to be successful anyway.
I know these dumb fucks in Thailand, like armies of them, who are making 10 to 50 grand a month in everything from fucking SEO spam to e-commerce and all kinds of like grifty sort of low breed things.
Hmm.
I mean, most people who are going to be good at trading would be much better doing some sort of entrepreneurial thing. Um,
Yeah.
a higher probability of success anyway. Um, I love WC. I've known him since I've known him for like 12 years now.
Oh yeah. I also wanted to get him on. We scheduled it already, but I
Yeah,
fucked it up a bit. So
he's a
like,
great guest for you. He's a really
yeah, I think
he's,
it'll be cool as well.
he's so insane that he
I like his articles; they're very insightful.
he sews razor blades into the toes of his sneakers in case he gets kidnapped. He's like that kind of guy.
What?
Yeah, he's like nuts.
That's crazy.
He's great. He's
But
great.
now you just gave away his secret.
Oh, oh no, you can't scrap that boy. He, he's he's a very very likable young man.
Mhm.
I like him a lot.
I'm wondering, since we've talked a lot about different strategies now and what you can do in the market and how is it looking and how it's easier in crypto than it would be in TradFi or anything like that. What do you
Okay,
think about the future of systematic trading of strategies and anything like that in crypto as like returns are decreasing and edge is decaying and stuff like that? What is like your view and your plan for the
okay,
future?
it's fairly obvious what's going to happen, right? Hey, dog. What's going to happen is that the very attractive yields in stable coins that are available right now are going to compress, and the yields from doing simple dumb trades are going to go down over time.
Hmm.
And the moment that TradFi turns up here in force, like um, it's going to be on a probably 10-year path to being like a slightly riskier version of the stock market, or swallowing the stock market whole and all the TradFi moves on chain.
Hmm.
That's a potential outcome, like the Hyperliquid dream scenario, right?
Yeah.
Um, I hope that happens. You wouldn't want to bet on that. Well, I am betting on that,
Not financial advice.
but someone who is smarter than me wouldn't bet on that. But that could
Yeah.
happen. Like I think
Hmm.
that's a bet with good convexity, like that. So if TradFi comes in here, all of a sudden we've got a bunch of smart people competing for the same trades.
Hmm.
So is crypto still riskier than the stock market? I think it is.
Hmm.
Should you be paid more than the stock market for doing something riskier than the stock market? I think you probably will be paid on average and noisily more as long as it's riskier than the stock market.
Hmm.
And I think as long as, so I talk to my TradFi friends, um, and they won't touch crypto. Like they're like,
Mhm.
oh fuck all another FTX. They don't understand the DeFi. They hate it. As long as they hate it, we're in good shape, right?
Yeah.
We got the toys all to ourselves. Um,
Mhm.
when that starts to change, I think it'll probably change in two ways. I think it'll change slowly and then very quick.
Mhm.
Because, and why do I think that? Because that's the way it changes in most things. You know, 1 minute internet was having the internet at home was kind of a niche thing, and then the next thing we're
Mhm.
living our whole lives on it. 1 minute phones weren't even that important, and then the next
Mhm.
thing it's like the most important thing you own. Like that's the way of shit, right? Um, yeah, I think the goal is to get enough capital that you don't have to try and 100x it anymore or 10x it.
Mhm.
That I think, right now you can make, well, we can make 50 to 100% in crypto and do that fairly sustainable in bull markets and bear markets. I
Mhm.
think if you're a professional trader in crypto, you should be making between 50 and 100% a year without doing stupid risk taking stuff, and you should be doing it at a
Mhm.
sharp ratio of at least 1.5, um, probably 2 if you're any good. And
Mhm.
so, um, will that be sustainable? No, but if you halved it, would it still be good enough? Fuck, 20% a year is like better than George Soros in his prime, right? Like that's exactly
Mhm.
what George Soros did. Warren Buffett didn't do like 20% a year. Like, like it's like if you've got, as long as you're not stuck on the outside with no capital, as long as you've gambled your stake into something meaningful,
Yeah.
fuck, 10% a year on stables looks pretty good if you're not going to get it stolen, if you've got proper institutional custody on it.
So you think the window of opportunity is closing, like the famous Degen Spartan tweet where he's like, you
Oh
need to
yeah,
hyper gamble yourself
yeah.
after college.
It's, it's I mean, I'm interested in what you think about it, but yeah, what do you think?
I mean, as someone with a lower capital base, I would like to believe that is not the case. But if I look at it logically, I think there's no way around that really. Like the opportunities are probably, or they're gonna shift maybe. I think it's still probably a huge advantage if you've been in crypto for a long time, if you've been in markets for a longer
Oh yeah,
time. I mean, because eventually, even if you're not smart, but still you gain the experience to be a bit comparable to someone like that. But yeah, as a new person, it's like, I mean, I feel like 2021 was the peak of the alt season that we're all
yeah.
looking back
We're not
towards.
getting
We're
back.
all waiting that is happening again, and that will like never happen again. That is like a unique thing that was a once in a lifetime
God,
opportunity.
it was God, it was good.
Yeah, and that is
Um,
probably like I don't think that will come back. No matter if like we're making the rates to zero again and whatever, unless we get another COVID style event or something like that. But
I I like Jezebel.eth. He's a very smart guy, um,
mhm,
and he's big on the long degeneracy thesis,
yeah,
and he's got a very good idea, which is being early to the new thing. And I
mhm,
think early to the new thing is where you see a lot of edge. Like if you were
yeah,
in those early days of memes, if you were if you early on recognized that Hyperliquid was much better, like an order of magnitude better than fucking DYDX. If if you're early to the new thing and right and with conviction, I think that's its own type of magic too. I think that's
mhm,
probably, if I was starting with a small stack, that's something that I'd put a lot of thought into, like being
mhm,
early and being right in size.
yeah. That's good advice, I guess. Yeah. I have one more question about your product that you're launching, your vault. If you can explain a bit more about how that
Sure.
works
All
or
right.
how it's going to
So
work.
you deposit USDC. We put that money in a vault on Hyperliquid. It's not one of the Hyperliquid vaults. It's an ERC 4626 vault, and we take trades with it. And
What does that mean, ERC? whatever
It's
number you
a,
just said.
it's a standard for DeFi vaults.
Hmm.
And so
But it's not
basically,
a Hyperliquid vault itself.
it's not
It's
a
like a
Hyperliquid
different thing.
vault. It's its own token. So
Hmm.
USDC is a one-to-one mint with this token TLP, which is Trend Liquidity Token. And as we gamble and make money, the token goes up. If we gamble
Hmm.
and lose money, the token goes down. So it's not. It's a tokenized hedge fund. And
Hmm.
the types of trades that we're talking about are more advanced than the sort of simple ape, buy the shit that's gone up and short the shit that's gone down.
Hmm.
What we find when we look closely at momentum effects, which are the dominant effect in crypto, is that momentum works bigger on the big shit. So what I mean is that trend following works better on Bitcoin than it does on Ethereum, better on Ethereum than Sol, better on Sol than
Hmm.
XRP, and so on and so on and so on, until about a third of the way down the universe, when you get down to little shit coins, they look like they pump, but they really dump. So we have negative trend effects. So what we're
Hmm.
doing is very closely modeling those interactions in ways that make sense so that all the predictable things that affect how much something is going to trend, we've got modeled. And it turns out that you can get very, very good returns. Now,
When you say that it works better on bigger stuff, like it works better on Bitcoin than Ethereum, is that like in a return percentage wise, or like how
yeah,
long the trend lasts? Or
in a return percentage wise and a risk adjusted return.
interesting, I see.
So it looks like the small coins trend further and faster, but that's not
Hmm.
actually the case when you adjust for volatility, because those
Hmm.
small coins wiggle around all over the place, right? Like
Yeah.
if you change it so you're measuring apples for apples, Bitcoin trends much better than any shitcoin, much better,
Hmm.
and Ethereum trends much better than nearly all of them too, and it's very, very, very predictable, and this is kind of enough of a secret sauce that you can turn trend following from a sort of a sharp one. Trend following is a sharp zero point 0.5 trade in TradFi. It's a sharp
Hmm.
1.5 trade in crypto, and then you model these interactions properly, and it goes to somewhere close to sharp 2.5. And sharp
Hmm.
2.5 is starting to get into the rarefied air of holy fuck returns. You know, Rentec was like a sharp 2.1. And of course, we're not as good as Rentec. We're just taking more risk because crypto is riskier.
Hmm.
But still, we're talking about sustainable returns over 5 years of between 50 and 100% a year with no breaks. And
So if you're doing like the top 50 coins or something like that, right?
oh, we do a large universe, but we model the interactions fairly closely.
Why don't you just if Bitcoin is so much better of a profile than the other coins, why don't you just like only trade Bitcoin with like more leverage instead of all
This,
the
this is
all
a
the other
really good
coins?
this is a really good question, because if you're only trading Bitcoin, even though Bitcoin works better, there are times when you would have missed hype, for example,
I see. Okay.
or you missed the Solana bull run. And
Yeah.
when you choose Bitcoin and say, okay, Bitcoin's what worked best in the past,
Hmm.
now you're implicitly saying what works. Now you're taking a bet, and your bet here
Yeah.
is what worked in the past is going to work in the future. So
Hmm.
now you're taking a fuckwit bet. Now you're betting that Bitcoin's still going to be the one crypto when Ethereum's still going to be number two, and like those aren't
I see.
bets.
Yeah.
Those are bets that make a fuckwit out of you, right?
Hmm.
Like, and you know, trading is this infinite game. So you build 100 bridges, and then you suck one cock. You're not a bridge builder anymore, right? If you're not a bridge builder, you're right.
That's a
And,
good
and this
analogy.
and this is trading. Like if Bitcoin goes sideways at 100K for 10 years, and hype goes to $1,000, and you've completely
Hmm.
missed it, you're a fucking cocksucker,
Yeah.
because you
True.
took
Yeah.
the bet and the bet was wrong, and it's all on you, and you're a fuckwit.
Hmm.
And so th- trading is an infinite game. And infinite
Hmm.
games are very different than, like, if you're trying to gamble generational wealth and hyper gamble and then get the fuck out and retire to your farm with your trad wife before it all falls to shit. That's a very different game than an infinite game.
Hmm.
where you build 100 bridges and then you suck one cock, right? Like that's a completely different game. You just end up being a cocksucker. Like, and that's it.
How transparent is the strategy that you're running? Like how do you balance the transparency of having like a public vault with like
So everything's public.
giving up your edge?
Our trades are public, and this is a problem. This is an inherent problem. If people can see what you're
Yeah,
doing, they can try and front run
yeah.
you flows. The initial way around it is to be better at executing than them. So by staying in the market all the time. So if you're in the market and you're making markets all the way levels up and all the way levels down, you're sitting as a market maker. It's kind of hard, not impossible, but kind of hard to see what you're doing. So it requires a certain level of technical sophistication to see which way your quotes are skewing. And then to front run your trades, they have to not know just what you're doing now. They have to be able to predict it a little bit out in the future. So your defense against people being smarter than you and faster than you is to be smarter and faster than them, right? So Hyperliquid, there's no infrastructure advantage. Like the guys who are co-located in Binance with the VIP9 market making setups, they have an information advantage. They have a speed advantage. They have a tech. You don't have that in Hyperliquid, right? Like
Yeah.
it's a latency based thing. So you can be competitive. Well, we can be competitive on Hyperliquid. Like we have very good market making infrastructure. And how did we get world class market making infrastructure? Well, I found the guy with the best stuff that I could find, and then I gave him the chunk of my company. Like I didn't fucking invent it. I'm not that smart. Like no
Yeah.
one's smart. Like I mean, if you spend any time around the good market makers, they're just like they're just at another level, and the infrastructure is full on, and like everything about it is full on. Like it's a very, it's a barrier to entry that you should welcome because it means the fuckwits can't come along and eat your shit.
True. Yeah.
Yeah.
So we go back to the beginning where it's just about being in the right group chats, basically.
Yeah. You gotta, I mean, and I think this is a wonderful thing about crypto where, I don't think anyone's really more than two steps. Like, I don't think there'd be anyone in crypto that's not two hops away from the people that I know. Like, I think if you wanted to get a meeting with anyone in crypto, you'd probably get a meeting with Kobe, right? Like, eventually, it might take you a little bit, but you'd be able to do it, right?
Yeah. Maybe
Eventually.
I don't. I mean, it depends on him, but like it wouldn't be impossible. Yeah, crypto is
It wouldn't
very
be
tight knit.
impossible. Like, it's a small world, and
Yeah,
if you're not a fuckwit, because there's a lot of fuckwits in crypto too, right? Like
I am a
if you,
little bit. I am a little bit
I'm an asshole online, but like
to a reasonable degree.
I'm really an asshole online, but I'm there's a lot of people who say one thing and then do another when it comes to money in crypto Twitter, and I'm just not one of them. Like I'm an asshole, but I'll do what I say, and I think you guys have a reputation of being like that, and I think the people who stick around realize that you just can't. Crypto's too small to shit where you eat, right?
Yeah, I mean, many people still do it. Like many people forget about what other people have done and whatever. It's like a short memory, but like if you stick around, reputation is very valuable. I agree with that.
Yeah, it pains me that there's people like Kook.
Yeah, like I just read about the Mega Eve guy
Yeah,
defending his
exactly.
allocation. I think that's I don't know. I don't know what to say
And
about
because that guy is like really a known bad actor. Like he is known bad. He's not. There's no.
that. Yeah. I don't know why you would choose like that hill to die on. To be
So
honest, like.
we were talking about Mitch, right? Like Mitch was a perfect example of a known good actor. Like like Mitch was an asshole, but like when he said he was for your coin, he was for your coin. Like he round tripped all those things that he said he had conviction on, right? Like.
Didn't he also do like some scamming though? I'm not really sure. I wasn't too much into that, but
Like if you're going to copy trade Mitch, like
yeah.
I attracted copy traders when I was doing it too, and because I was building my house at the time, and I paid for my kitchen from copy traders because It's like if you're successful in that meme era, if you're
Yeah.
successful, people will just like I had like 243 people copy trading me. I'm like, and I
Mhm.
would do shit like get on streams and accidentally leak my wallets, like accidentally. And I paid for my kitchen off these fucks, right?
Yeah.
Like, and so I bought with a buddy of mine, Antoine. We bought. Do you remember Mitch launched a coin and then he abandoned it?
Mhm.
He launched Mitch Coin on Pump
Yeah.
Fund, and then he abandoned it. I
Mhm.
bought up all the supply with some buddies, and then
Mhm.
um, sent Mitch 1% of the supply, and people were like, "Mitch's wallet has bought Mitch," and just sold right out into that. Like
Yeah.
to me, that's not crime. That's all in the game. Like that to me, that's just money ain't got no owners. Money only got spenders.
Yeah.
Like if you are gonna try and trade against me in that meme coin era and
Mhm.
in that on-chain world, and you're gonna try and outsmart me, I'm gonna take all your money because I'm smarter than you.
Don't hate the player, hate the game.
Yeah, I mean that's totally fine. But Kook's not doing shit like that. He's just
Yeah.
starting a project and then rugging it. Like
Yeah.
that's not hate the
Yeah.
player, hate the game. That's just being a cunt.
No. Yeah. There's many people like that, and
There's
I don't
many
know.
people like that, and there seems to be very little consequences. I don't get it.
I mean, it's kind of the part, if you're creating a permissionless financial system, then that everyone can take part of. You can't really kick people out of it. Everyone can basically do what they want, and then this is kind of like also part of the consequence. But I think it's a bit sad sometimes that there's not more social
Yeah,
backlash
I
on
feel so
stuff like
too.
that.
I feel so too. And I also think that over time, this sort of grifty aspect of it will get washed away.
I think more people are also just going to jail and stuff like that. Like the regulators won't let stuff be like this forever.
Yeah, I hope so. Like, I mean, I've been to jail. I've been to plenty of jails, and believe me,
Yeah.
those little motherfuckers are going to hate jail. Like that is just not
Yeah.
I mean, I hated jail, and I'm a fucking gorilla. So like,
Yeah.
I'm sure it's going to be it's going to be a terrible day, first day in jail for those guys.
I'm really interested since you've given a lot of good trading advice already so far, but since you have like a lot of life experience in different domains, as you could say, do you have any like life advice that you can give people? Any wisdom that you have gained throughout your
Yeah,
adventures
I
in
made a
life?
really, really big mistake. And when I was young, and when I was 25, I'm 51 years old now. And when I was
Hmm.
25, I was worth 10 million bucks. And by the time I was 30, I was worth negative million bucks, and I was in jail. And
Oh shit.
the mistake that I made is a really bad mistake. Is that I'd
Yeah.
won the game and I kept playing. I'd won the game.
Mm.
Like, uh, like I had 10 million bucks at like the turn of the century. It was a fucking lot of money back then.
Yeah.
Like back then, it was a lot.
Yeah.
I could buy
Yeah. It
anything I
was
wanted.
enough to retire.
I could do anything. It wasn't just retire. I could do anything I fucking wanted. Like no one stood in
Yeah.
my way. Like there was nothing that was like if I wanted to charter a plane and get all my buddies to go somewhere, we'd just fucking do it and don't worry about it.
Hmm.
It was like it was that kind of life. Um, and then I kept playing even though I'd won, and I risked what
Hmm.
I had and what I needed for what I
Mm.
didn't have and I didn't need, and that is the mark of a very stupid man. And I
Yeah.
was very stupid, and that's like profound stupidity. And when I went broke and I tried to come back from that, I thought I'd just be on top again, and it was just like a long climb back. Dude. It was
Mhm.
like really humbling, like, and because I behaved like such a fuckwit when I was young and rich, like
Yeah.
I was a fuckwit.
As you
Uh,
do, yeah.
I was like, I was really, and it was before the internet and social media, right? So
Yeah.
there was no real people weren't saying, "Oh, he's acting really badly online and pressuring me into
Hmm.
stopping." They were like, people were enabling me,
Mm.
and and yeah, I deserve to go broke. So
Mm.
my life advice is that karma is real. In the long
Mm.
run, it may not seem like it, but in the long run, you get what you deserve. And the best way to get a good outcome, sadly, is to deserve a good outcome. So. that's been my experience. Is I have a good outcome now.
Yeah.
I have a really nice life, and I have a life that I wouldn't give up, and
Hmm.
and I feel like I got a good life by deserving a good life. And
Hmm.
yeah,
I feel like you should write a book or something. I think your story is very impressive
um,
of like going that far up and then going back. Like very few people make it and then lose it and then make it again and keep it. I think that's quite impressive.
yeah, we haven't done the keeping part yet, but we're on the way.
I mean, it
Yeah, I'm
feels
not
like
gonna fuck.
you're
I'm not
you're
gonna
you're
fuck up.
wiser. You're
I'm not
wiser
gonna
now
fuck up
this
this
time.
time.
Yeah.
Yeah, it's yeah, life is cool too. And if I did fuck it up again, if I did go broke, what? I've only got another like 20 years I have to sit through anyway. Like, what the fuck? Like, and that's another thing that I can tell you is that having been rich and poor and in a penthouse and in a shit house,
Hmm.
definitely better to be rich. Definitely. But it's like 50% better. It's not a million percent better, right?
Yeah, yeah, I get that. I get that, but I think you need to experience it for yourself before you really
Yeah, yeah.
understand that.
If someone had told me that when I was 25, I'd tell them fuck off. So
Yeah.
yeah, yeah. I guess you get smart, you get older, and you should get wiser if you're doing things
Hmm.
right. But then you get older, and you're too late to do anything about it, right?
Hmm.
Like I'm too soon old and too late smart, and you know, yeah, youth is wasted on the young.
Really, I mean, I guess at least I can like learn something from you, from your wisdom, and the other listeners as well, and maybe like make some less mistakes and
All right, man. What a
be a
great
bit
pleasure to
wiser.
speak to you. I'm sorry for rabbiting
Yeah.
on. Old
No, no, that's fine. I really enjoyed the talk. Thank you for coming on. It was great to talk to you. Goodbye.